Our next presenter today is Pierre Leveille, who is the president and CEO of Deep South Resources. Deep South trades on the TSX Venture Exchange on the ticker symbol DSM. And Deep South, for those who don't know, is advancing what is unarguably one of the most prospective and attractive copper development projects globally, located in the country of Namibia in Africa. Pierre, welcome. It's great to have you here. And with that introduction, Pierre, I will turn the conference over to you for a presentation, and then we will have a short Q&A afterwards, okay?
Okay, thanks, Chad. Basically, we are a TSXV listed company. We hold a very large copper porphyry project in the south of Namibia. Namibia is a low-risk mining-friendly jurisdiction in Africa. The deposit is amenable to low-cost bioheat leach, with recoveries up to 96%. Also, we have an excellent potential to increase the size and the grade of the resource. In December 2020, we issued an updated PEA that shows very robust economics at a 20-ton million per annum throughput. We have an NPV of $950 million US with an IRR of 30% at a price of $3 per pound of copper. We're advancing the project towards a feasibility study. The first step is an infill drilling program that has already started 2 weeks ago. It's going to drill in the center of the deposit, which is what will be considered eventually as a starting pit. It hosts 140 million ton and where we see grade on the historical intercept of between 0.5 and 1%. We will do also further metallurgical work starting next month, some high pressure grinding roller test work, some scoping study on water usage, on power, and eventually we will complete a mining engineering and environmental impact study. So it's an advanced project, and we're onto a pretty quick development path. On the slide 4, you can see that we have 140 million shares issued. At the moment, we have a little bit over $5 million in cash, so we're well funded for the program we have started. The management and directors, we own 14% of the share capital, and Tech Resource holds 16%. On page 5, we talk briefly about the copper market, where at the moment, there's a lot of mines, very large mines in the world, where you can see the production going down because the mines are old. The mines are mining more and more lower grade, and the resources are depleting, the reserves are depleting. So it creates a problem because supply is going down, and the demand is going up on the other side with the electrification of transport, with also the infrastructure programs that are coming. So over the next 6-7 years, you can see that there will be a serious shortage of copper, so it will certainly maintain the price at very good levels. Some analysts think that we would not be surprised to see $5 or $6 per pound of copper in the coming future. On slide 7, what you see there is the surface area of the project. In the center, there's a dry riverbed. The deposit is on the right-hand side of that. What you can see, which is very important, it's a very dry area, so there's limited vegetation, limited animal life, no farms on top of that, so it's governmental land. So the nearest town is 30 kilometers from the project, so you can see that there won't be a lot of resistance for environmental impact and social impact. It's well situated for that. The project is in Namibia. Namibia is a very friendly mining country. It's the parliamentary democracy since 1990. Its justice system is very independent. It's a transparent mining, minerals and surface title system. It's ranked #1 in policy perception amongst African countries, 14 globally in the 2019 Fraser Institute Mining Survey. It's very important. Mining is very important in Namibia. It's 25% of GDP and 50% of the export. So we have a very huge support from the government. When you look at the World Bank website or IMF website, you will see that it's always ranked number 2 or 3 in quality for investment in Namibia. It's a very, very good country, very mining friendly. It's one of the world's good mining jurisdiction. The project is very well situated, completely in the south of the country. I'm on page 9, where we have near the border of South Africa. There's the Orange River making the border, and that's where we will eventually pump and pipeline water for the operation at about 15 kilometers. You can see that there's a main commercial road coming from Cape Town, South Africa, crossing all the country. Along that road, there's a low voltage power grid that we can use for the mining camp, and the main power line for the operation is 85 kilometers away. It's a very sunny part of the world, very sunny part in Namibia. It's 360 days of sun per year, so you won't be surprised to know that we will start a scoping study soon on the solar power. It's important because it's certainly going to be improving the economics. The 43-101 resource estimate is 457 million ton at 0.31% copper. That's the indicated, and that's what we use in the PEA. The project came with a lot of work done in the past. It includes 66,000 meters of drilling, a lot of metallurgical tests, many things like even a feasibility study has been done by Mintrock in the mid-90s. So it's a huge database. It's a huge, we have a lot of reports, and it has been done by very serious companies such as Rio Tinto, Falconbridge, Mintrock, and many others. What we know is that in the center of the deposit, there's a high-grade area, and that's where we work at the moment. That's what we want to develop. But when you look at that specific cross-section, you can see that the drilling was done in general from surface to done down to 350 meters, and that's where we have the resource estimated, surface to 350 meters. But you can see we've drilled down to 850 meters, and it's still mineralized arriving there. And we see some good high-grade patches also in that area. So we know we can increase the tonnage at depth. It's open-ended at depth. And one important thing to mention is that you can see that most of the drilling was done vertical, and it was spaced by 150 meters. Most of the companies in the past were treating this as a classical porphyry, the same porphyries we see in Chile and Peru. And but in fact, it's not exactly a classical porphyry. It has changed over time because it's a very old porphyry. It's Archean. It's 1.8 billion years old, and way older than the Chilean porphyries, which are 100 million years old or a little bit more. So over time, there was a lot of transformation, and there was many shearing events. And what happened with shearing events, it has created shear zones and faults that have, and when these events were happening, there was a redistribution of the mineralization, and grade was concentrating around these shears and faults. And so when you drilled vertical like it is on that project, spaced by 150 meters, you miss a lot of that high-grade material. So we're confident that the grade has been underestimated, and in drilling in these high-grade areas, drilling in angle for most of the case, we will improve the grade of the project. Another important factor is the metallurgy. In a project like this, you want to find an extraction mineralogy or extraction technology that will enable to extract the metal at low capex and low opex. And in our database, we found in the past that the two tests that have been done by Mintech in South Africa using bio-assisted leaching, and they gave some recoveries up to 95%. So it's very high. So we went deeper into that, and we discovered that bio-assisted leaching is not a new technology. It's a robust technology existing since over 40 years. in the copper space is mainly used in Chile by majors such as Anglo, BHP, Codelco, and many others. But we found one project called Radomiro Tomic. It's a very large mine operated and owned by Codelco. They used bio-assisted leaching successfully since 2015 on the exact same mineralogy than what we have. And that's very important because it's mineralogy oriented in that type of technologies. What you need is a very simple mineralogy. We have been in touch with Codelco, with their technology development department, and for them it was a no-brainer. It's for sure that bio-assisted leaching is highly amenable to the mineralogy we have at HYBE, and the mineralogy is very simple. That's what you need. It's 98.5% chalcopyrite, 1% bornite, and a little bit of oxide, very thin sheet of oxide. And no deleterious element, no borium, no uranium, no arsenic or anything like this. It's very important because what it does is that the bacterial activity is not conflicted by many minerals. It's only focusing on one mineral, and it's a lot more efficient that way. So that's what makes that mineralogy highly amenable to the sorry for that. That's what makes the mineralogy very compelling. Sorry for that. Okay. So the other thing is that because it's a very old porphyry, one of the things is that it has transformed over time, and it's not anymore a volcanic rock. Today it's a metamorphic rock. It's still a granite, but it's a softer granite than what we see in other porphyries. And what it does is that we don't need to use grinding and milling, which are extremely high capital, capex and opex intensive. So we can keep that operation extremely simple. It's crushing, high pressure grinding rollers, heap leaching, and that's it. Go to SXEW cathodes, and that's over. So it's a very simple operation. It's important because in a low grade project, simpler will be the operation, better will be your margin. So it's always the key. So in that project, the ore at that project, because it's very old, because it's metamorphic, because of the shearing events, it guides us to the use of very simple technologies, and it makes robust economics. That's what we see here. It's the PEA that we have issued in December. It's 24 years mine life on a 24 million ton per annum throughput. It's only the indicated resource that has been used. You can see that the grade that we have used, the grade of the project, the 0.31%. Stripping ratio is 1.41 to 1. Copper recovery we used 80% because we know it's sustainable on a long period at that level without any problem. The capex has 340 million and the cash cost at $1.34 per pound of copper. You can see that the margin is pretty impressive. The project economics at $3 per pound, we have an NPV of 950 million with an after-tax IRR of 30%. The payback period is a little bit long at 4.23 years, but that's very important. Where we can improve economics, and it starts with drilling. If we improve the grade, let's say just to 0.35% copper, the payback period will fall down at 3 years and a half. So you can see that it's a very important improvement, and that of course will have an improvement on the overall economics of the project. There's a lot of other things that we can do to improve the economics, starting with the solar power generation. So it's that will come over the next months because we're working on improved flow sheets and solar power, and there will be quite a lot of factors that will come and improve the economics. That's a footprint of the project on page 13. A part of the project, that's the center area where we have that higher grade zone. That's where we have started drilling recently. We plan to do infill. We do an infill drilling program there with the mean to estimate a measured resource over the area, have a precise grade, average grade for that area, and also that grade will influence the grade of the overall project. When we look at that pit number 1 at the bottom here on page 14, we have a cross section of that pit, and what you can see there is that past drilling on the right hand side of the adit that was dug in the 90s. You can see that they were drilling at spacing of 50 meters, and there you can see quite a lot of high-grade patches. When we go on the left-hand side, you can see that the spacing at 150 meters is showing less higher grades. So it's quite certain that it has missed quite a lot of high-grade material in that area. You can see also that drilling an angle under the adit, over the adit, and deeper than the adit, every time they were drilling an angle, they were crossing these faults and shearing zone, and they were hitting high-grade material. So, we were pretty confident that we will see some very good results out of that program. So that's what we're doing now. We're embarking into a feasibility program, and for the next 2 years. So there will be quite a lot of results coming from the drilling program, metallurgical work, HPGR work, and also we will test 2 other technologies eventually. So there will be, before the end of that program, there will be, in midterm, there will be a PFS, pre-feasibility study, followed that by feasibility study. So over the next 2 years, there's quite a lot of activities on the development of the project that should generate a pretty interesting news flow. In last slide, you can see that where we compare to our peers in project, hopefully similar to ours. So that's our story. That's who we are. And we're pretty happy now to be well funded and have started with that drilling program. It's we're looking forward for very good results.
Excellent, Pierre. Thank you very much for that. That was a great presentation. We do have a few minutes for some questions from the audience. The first question we have here is, are any parts of the deposit amenable to in situ leaching rather than open pit mining and bio-assisted heap leaching?
Yes, it's possible to do that, but then it's the cost of operation will probably go higher, and we will complexify the operation if we do that. So it's not necessarily the right way to address the situation.
Right, of course. As you said earlier, the simple projects have the best economics.
Yeah.
And with respect to the heap bio-leaching, in terms of the transition between the oxide, transitional, and sulfide mineralization, do you expect similar recoveries across those 3 zones of mineralization?
That's a good question. There's no 3 zones. There's only, I will tell you why. You can see copper all over the place staining. It's like these green and blue patches all over the place, but it's very thin. So the oxide zone is extremely thin. And then you are immediately on primary sulfide. There's no secondary transition onto that, and there's literally very, very little oxide. So It's really a primary sulfide project.
Okay, interesting. So it is a little bit unique in that respect. And then you mentioned in the recoveries, you have not accounted for molybdenum at all, moly at all in the recoveries or the economics. No. Is there any work plan to incorporate moly into the recoveries and then obviously improve economics on the deposit?
Yes, that's where we can also improve economics on that side. The reason for that is because a large part of the assays we have from the past have never assayed for moly. They were assaying only for copper. Bit strange, but that's the way it is. So there's only 14,000 meters out of 66,000 that has assayed for moly. But in our case, we will assay for moly, and we will have enough to start including moly in the next resource estimation and next PFS.
Okay, excellent. Thank you. And on Pierre, on slide 10, I believe it is, you did show a 3D model of the deposit and highlighted some of the results. In terms of the depth of the deposit, is there any thought yet, or is it probably too early to even think about the potential for a deeper deposit or a deposit at depth, which may be something long-term that could be potentially a block cave or some other sort of underground operation?
There's no real work or even thought that has been done on that side. We know it's open at depth. We think we can mine open cast for at least down to 350 meters.
Okay.
So that will be for future development, let's say, to think about how we can mine the deeper horizon. And we will first want to drill in these deeper horizons to start developing the resource and have an idea of how it's defined, to make sure that to have an idea of what we can do with it.
Okay, excellent, excellent. And just one last quick question, Pierre. In terms of the feasibility study you're targeting will include the main deposit. In 2022, are you targeting exploration at any of the satellites?
Yes, but it's going to be greenfield exploration. We will have to start from the start, with some soil sampling again. There was some being done there, but there's still some to be done, and most probably a little bit of drilling on them to start having a better idea of what they look like.